You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan. Welcome to Masters in Trading Live. Masters in Trading Live, I get on here every day. The market's open, 11 a.m. Eastern Time. Go over the market, share some thoughts. Once in a while, we'll share our trade of the day. Yesterday, really good conversation about trading pairs and then trading triangles. I gotta turn my volume off. So yesterday's conversation, great question. I believe it was from Aaron, and we talked about trading pairs, say gold and silver. But what happens if you want to trade gold and silver, and we trade gold and silver as a pair because they're super correlated, right? But what happens if there's another metal that you want to throw in there as well? Say you want to trade gold, silver, copper, and that becomes a triangle. So I talked about that a little bit yesterday. I had a great question. I want to follow up on that today. I want to add some clarity to that. And then also, it is earnings season. We love trading earnings at Masters in Trading. Literally, when earnings season comes up, we have a rinse and repeat strategy. So we had one of those earnings trades come off yesterday. Now that it comes off, I can show you exactly what we did. So I'm going to show you an earnings trade, and then we're going to talk about pairs, triangles, and strips. It'll be a lot clearer when I get to the screen. Here we go. I got the chat up as well, guys. I love how active the chat is, guys. Thanks so much for coming in and saying good morning. A little bit late today for the crew. All right, here we go. We're going to start with our Shopify trade because we had an earnings trade, and I can only share. Hey, Chris, good morning. We had an earnings trade. Whoa. And I can only share these earnings trades once we cover the trade. So here's how it works. Remember, I said it's like clockwork, right? Every single time earnings comes up, we do the exact same thing. And to simplify what we do, a name like Shopify. Let's say Shopify moves 20% after every earnings. Well, if the options are not pricing in at least 20% of movement, then that becomes a darn good trade for us. So what we did with Shop, the entry date is going to be right here. And the entry date will be right here. So here we go. Here is an earnings trade. Now, when we do earnings, we don't want to guess whether Shopify is going to go higher or lower. But what we do want to play is that the volatility priced in the options market is not reflective of historical movement. So the trade that we did is we did the 115 calls and the 95 puts. So we have the 115 calls and the 95 puts. 115's right here, 95's right here. Now, we do this trade because we're long from the 115s, and we're long puts, so we're short. We need Shopify to move. Once it comes out with earnings, it moved. It moved nice and strong, but it just moved to that 115 strike. It didn't really move enough. So what I did is on the 28th, which is right here, which is going to be right here, instead of getting out of the trade, what I did, I sold the 140s. I sold the 140s for $2.06. That's right here. So watch. I'm going to take this off, and I'm going to simplify the position because right here, we have the 115 calls. We also have those 95 puts. The 95 puts, they cost $375 to get in. They are done. They are, what do they say for the bad horses? This is glue. This is dead. So we are going to lose $375. That's fine. But this one is alive. And not only is it alive, We're long 115 and we're short 140. So yesterday, when Shopify traded up to 128, I decided, guys, it's time to get out of this trade. We were able to get out of this trade. These 115s, they were trading 395. We got out of those at $12.30 for a 211% gain. What about these 140s? We sold those 140s as well, right? Well, we sold those for $2.06. Since that's all premium, that got down all the way to 0 to 4 cents, and we locked in about 100% on that trade. Again, these are glue, these are dead, but it doesn't matter. We're still able to lock in, I don't know, about 120% return on Shopify. This was a phenomenal trade, but this is exactly how we trade earnings. The next slide, I'm going to take you to Shopify options, and I want to show you why Chris said we locked in 117% on that trade. Cool, good trade, thank you, Glockenspiel. But I want to show you why we covered. Now, Shopify 115s. Your 115s are trading 1095 at 12. When you cover, look at the puts. You see the puts? The puts have no premium, right? Because the puts have no premium, these 115s were just stock. They had no more optionality. When your options have no more optionality, have no more leverage, that's when it's time to get out of the pool. This was a phenomenal trade, and this is exactly how we trade earnings. Rinse and repeat. Make sense? Any questions? Anybody in chat able to hit this Shopify trade? In our Discord community, we can always just search for the ticker, SHOP, and you'll see we have 44 results of people talking about Shopify. Shop flying. Anyone taking profits? Jerry sharing his trade. What happened to Jerry here? I bought 2 strangles instead of the call debit. I bought them the day before earnings came out. Okay, so Jerry did this after the trade that we did. But that's what we do. That's in Discord. Everybody talks about the trade, the benefit of having a community. All right, we're going to press on to the next topic. This was the topic that we discussed yesterday. I answered the question, but then when I thought about it, I wasn't too pleased with my answer. So, Aaron, I'm not sure if you're on today, but hopefully you'll be able to watch the recording. I want to continue answering your question because this is something that I realize that I do in my trading, and it seems to be a little bit different than many others do as well. Okay. Whenever we're trading, we are always looking for correlations. We want to find names that trade together. And once in a while, when those names break apart or separate, they may present the trade. So if we trade a pair, and right now I have a triangle, we have the QQQ, the SPY, and the IWM. Now, we could trade this relationship, and that's a pair trade. If we traded the SPY against the QQQ against the IWM against the SPY, now we have 3 products, and that's called a triangle. Also, and this I am just sharing with you because I want to share it, but you don't have to know it. But if you're going to do one product against 7 products, against 9 products, that's called the strip. Okay? You can do 2 as a pair, 3 as a triangle. Now, this is more from the floor, more from trading packs and bundles, but literally, if this is the yield curve, and these are all years, traders can trade 2s against 5s, 5s against 7s, 7s against 10s, 10s against 18. If these were all different products, But if somebody wanted to sell the 10-year because they think it's stupidly expensive against the strip, they could do a trade like that. Okay, not important to know, but if I was going to tell you what pair trading was, if I was going to talk about triangles, I felt obligated to tell you about the strip. Back to my example with QQQ, SPY, and IWM. We're going to go through some charts now. NASDAQ and QQQ are the same thing. Can we just call them NASDAQ or QQQ? It's the same thing. NASDAQ is up here. S&Ps are here. Russell is down here. Over the course of 6 months, they're very correlated, right? They're moving in and out of one another. Sometimes the NASDAQ gets expensive. Sometimes the Russell gets cheap. Sometimes the Russell gets expensive. Sometimes the NASDAQ gets cheap. That is pair trading. We're looking at 3 outright contracts on this one chart. Here's the same chart on the previous page. Now we're just looking at NASDAQ against the S&P, which is the SPY. So this chart is this portion of the triangle. This portion of the triangle, NASDAQ relative to S&P, hasn't traded at this level going back about 8 or 9 months. That's the NASDAQ S&P. The next one, sorry about the colors, is going to be NASDAQ Russell, which will be right here. Again, I'm going to do the same thing right here. NASDAQ against Russell. NASDAQ is the most expensive it's been relative to the Russell in 6 months, right? So what do we know? Going back to this chart, what do we know? And these are all in the same time frame. We know that over time, the NASDAQ is expensive relative to the S&Ps, relative to the IWM, right? I'm just showing you that in these different charts. NASDAQ relative to S&P, you can see it. It's expensive. NASDAQ relative to Russell. You can see it, right? It's expensive. We're not done. What about the one part of the puzzle, right? This was 2 pages ago. This was the second page that I show you, and this is going to be this page. This is going to be S&Ps, SPY versus Russell. Again, let's do just a line to see where it's traded in the past. And again, S&Ps seem to be pretty expensive relative to the Russell. That's this. We want to back into things. We want to make sure that when we're long, you're long with intention. You're long where you want to be. You want to make sure where you're short where you want to be. So many times, I'll talk to traders that might be super, super bullish. Microsoft. I love Microsoft. I think Microsoft's going to go higher. But then we do an analysis just like we're doing right here in the triangle. And then we find out the NASDAQ is stupidly expensive relative to the S&Ps and relative to the IWM. Then I ask again, you really love NASDAQ? You really love Microsoft? Well, I like the company, but maybe it's not the right time to buy because NASDAQ is expensive. It's not relatively inexpensive. One of my favorite ways to look at 3 products, probably my favorite way to look at 3 products, is something called a butterfly. Now, some of you may be familiar with butterflies in trading. They talk about them in options. They talk about them in futures. But a butterfly for us right now is going to be QQQ is the belly. I'll give him a little face because I feel like being silly. That is the worst possible drawing ever. And now the wings are going to be SPY or the S&P. It's the same thing. They're perfectly correlated. Or IWM or RTY. They're perfectly correlated as well. This is a butterfly. Okay? Now with that butterfly is right here. In order to take advantage of this chart, a trader is selling NASDAQ against a long RTY, and it's also selling NASDAQ against a long S&P. And that's the chart. That's the trade. QQQs are stupidly expensive. Push yourself to look at things not in isolation. Push yourself. Okay? It's such a different way of looking at it. And I'm telling you, it's liberating. Once you stop speculating on whether the QQQs are going to go higher or lower, but instead you look at them relative to another instrument, it's liberating. It'll give you a lot more confidence when you trade. Everybody in All Access, you guys sit tight. I'm going to open up the Discord. I'm going to go over some of our positions and answer any questions that you have. Thanks so much for watching. I'll see you guys tomorrow, 11 a.m. Eastern Time. Hey, All Access. How's it going? I'm going to go to the screen right now. I'm going to open the Discord. My objective is to make sure we answer any questions that you guys have. So let's go to the screen. I'll also pull up the Discord.